Some have said that you are the instigator of FTX's collapse. You've called Sam Bankman-Fried a psychopath, a liar. Was it outright fraud?
Yeah, so I think there's definitely lying involved. He lied to his users, he lied to his investors, he lied to his employees, and he also lied to regulators all around the world, including politicians in the US. So, but I don't think we caused it. We may be the last straw that broke the camel's back, but I can tweet about a different company, and they will be fine if the company itself is fine.
Well, Michael.
Hello and welcome back to Cryptollennium. In today's video, we'll dive deeper into the concerns surrounding Grayscale after Gemini, the sister company, requested $1 billion in emergency funding, the instability surrounding Tether and USDT, as well as new developments on SBF Sam Bankman-Fried's collapsed FTX situation, and some insightful facts from today. So without further ado, please like and subscribe, and let's dig in. As you can see, Bitcoin is relatively in the same exact spot as we saw it in yesterday's video, with just a little bit of a lag down. Before we discuss Grayscale, let's unwrap what's going on with Tether and USDT. So tireless research allows me to believe that Tether USDT is the largest Ponzi scheme waiting to explode. This is because Tether acts as a fractional reserve bank for Bitcoin and other speculative assets. Tether is printed out of nothing with a keystroke to pump the markets. Is this true? Well, we won't take this for fact, especially coming from a person that has the name Black Swan Capitalist. So this guy preys on these types of events, it sounds like. So let's move on to another perma-bear, Peter Schiff, the all-time enemy or nemesis of Bitcoin. Look at this chart. It's ominous. Tether has never seen a collapse in market cap. Given the turmoil in crypto, one would expect a rise in Tether's market cap as crypto sellers park their cash in Tether. This looks like a run on Tether. If so, a run on Bitcoin will soon follow. Is he right? He does make a point that the market cap has seen an upswing, but I think with stable coins showing their true colors, there's only a few that you can really trust, and those are the ones that are definitely backed by something like USDC or even BUSD, the Binance stablecoin, because they have so much in reserves. Moving on, let's see if this actually means anything. Tether says it's moving $1 billion from USDT, from Solana to Ethereum blockchains. Now, why would they do this? This would worry many. This would worry me. But let's take a look. In more news, Tether should be the #1 concern in crypto markets, cryptocurrency FTX, same as FTX, no transparency, instead a vague pie chart of assets as a condition of a plea deal, fine from US authorities. So is this true? Should we be worried? Well, let's take a look at this article to answer that question. Tether says it's moving $1 billion from a Solana to Ethereum. A quick take states, Tether said it's performing a chain swap to move $1 billion USDT from Solana. Tether says the total supply won't change. So why is this concerning? Well, Tether, the issuer of the USDT stablecoin, said it was conducting a chain swap to move 1 billion USDT from Solana to Ethereum. And as we all know, Solana had a major collapse because of FTX and Sam Bankman-Fried having many different projects and arms involved in the Solana blockchain. A lot of liquidity on Solana, and I guess it technically wasn't liquid. So we won't even say that. Earlier this week, Binance suspended deposits of USDC and USDT from Solana, but quickly resumed them shortly after. This announcement came after rival exchange OKX delisted both USDC and USDT on Solana and also stopped accepting deposits or withdrawals, and this is probably because of fear of insolvency. The Solana Foundation declined to comment on the situation and referred to an article Tether posted yesterday. So let's see this article and let's see what Tether said about this entire situation and if we should be worried. I know Solana is probably hurting right now, but they seem to have at least they seem to have some sort of composure by keeping their, themselves quiet, their mouths shut. And in this case, it's probably the best thing to do, something Sam Bankman-Fried doesn't know how to do. Let's take a look at what Tether said, though. why USDT issuance ensures no risk from FTX Alameda. Well, the failure of FTX and Alameda is likely to be a watershed moment in history, as we all know, as one of the biggest financial failures, and has set off a daisy chain of leverage failures cascading through the industry. While there's still more to the story, and likely more counterparties who will emerge in the coming weeks, Tether wants to address one topic which has come to the surface following the failure of FTX. As it is well known that Alameda was one of the larger issuers of USDT, and due to this, there has been ample discussion of whether the failure of Alameda represents a risk to Tether. The shorter answer is no. The longer answer is as follows. And so they go in to describe how the Tether issuance works, what this means for them, and Tether's reserves in every USDT can be redeemed one-to-one with USD still. And so they're guaranteeing this. So what can Alameda do with their USDT? Their only option is to redeem any USDT they have for USD via Tether's redemption facility. This is the same as any other USDT holder around the world. So this means Tether is probably not feeling the hurt. Is that what we're thinking? I don't know. I guess more time will tell. And in reference to lending, leverage, and liabilities, did Tether lend Alameda any USDT or other funds? No. Tether has no outstanding loans of USDT, of Tether's reserves, or of any other funds whatsoever. So it doesn't look like they have any leverage. It doesn't look like anybody's collapse will attack their balance sheet or damage their balance sheet. And this is very encouraging, although there is not a lot of data to back this. If we have any blockchain whizzes that are watching, feel free to comment and give us some of your insights. The main problem countless other companies are facing is that they're recklessly lending, or they recklessly lent Alameda various assets relying on an extremely illiquid collateral, FTT tokens. Yeah, when you use imaginary money as collateral, you tend to see failures. And imaginary money doesn't only mean FTT. Imaginary money could be US dollars too. You know, we print that like crazy. Pretty much same thing as FTX is what the US government's doing, and the Treasury and all that good stuff. So is lending a part of the USDT issuance cycle ever. The only time Tether engages in lending is, as an example of Celsius shows, when Tether has lent USDT to select customers based on over-collateralization with extremely liquid assets. We believe the approach of many lenders in this industry has been reckless, lending huge quantities of money and accepting FTT and other illiquid assets and pinky swears as collateral. Can't pay back with a pinky swear. You can't really, pinky swears were cute and everything, and they worked out in elementary school, but in the big boy world, I don't think that would work. And so it's good that Tether is sharing this. But what about leverage? Leverage played a key role in the dramatic unwinding of FTX. Does Tether engage in any leverage activities, leverage trading, or collateralized borrowing against Tether's reserves? The answer is no. Tether does not take highly leveraged directional bets on digital assets as part of its operations. The Solana suspensions, Binance recently temporarily suspended USDT deposits on the Solana blockchain. OKX did as well. Why is this? Is there a high risk of inherent to Solana USDT? No. USDT issued on Solana is the same as USDT issued on any other chain. The token simply represents a claim to $1 of Tether's reserves and collateral. Alameda's heavy involvement in Solana doesn't impact the underlying dynamics of how USDT functions and how USDT issuance works whatsoever. So, should we be worried? According to this article, we should not be worried. Although there is a lot of tension still surrounding this entire situation, and we will see the layers of this onion peeling back. Hopefully, nothing too serious happens with USDT. Although I do not invest in USDT, I do not carry USDT stablecoins, but that is a personal preference. Let me know if you do in the comments below. Moving on, and to highly important, potentially catastrophic Armageddon type events, Grayscale liquidation could unleash a Bitcoin Armageddon. The discount to the NAV of Grayscale's GBTC fund has fallen to around -40%. Now what this means is Because Grayscale offers a Bitcoin fund in a way, kind of like you give them the money and they say you have the Bitcoins, it is like buying Bitcoin for a 40% discount right now. That is almost half off an already extremely cheap Bitcoin. And cheap is relative to my perception of how Bitcoin is supposed to work and performs and will perform in the future. But for some of you, this may not be cheap either. You may not want to touch it with a 10-foot pole, but some are taking advantage of this. Should we be concerned though? Well, let's take a look. Peter Schiff, our perma bear. This is an extremely biased individual against Bitcoin and cryptocurrency as a whole, but I figure we might as well throw his opinion in here just to play devil's advocate, and then we'll discuss where we're really going. So Bitcoin is only down 1% today. The Grayscale Bitcoin Trust is down 7%. It's trading at 46% discount to its reported NAV. And I'm assuming NAV stands for net average value, but don't quote me on that. If you can enlighten me and I'm wrong, please comment as well. This could be the next shoe drop. Maybe GBTC lost some or most of its Bitcoin. The market is indicating a major problem. This is not good for Bitcoin. Interesting. Let's see what this actually means. So, Grayscale's discount widens to a record 43% as FTX contagion spreads. The added pressure comes after Genesis Global Capital, associated with Gemini needing the loan, all that good stuff, a corporate sibling to Bitcoin Trust Manager, Grayscale Investments, halted customer withdrawals from its lending unit this week. And excuse me, I mentioned Gemini, and that was actually a reference from our previous video. We used an example that included Gemini and Genesis. So don't, I made a little mistake with what I was saying, but moving on, let's take a look at this chart. So this discount or premium to the NAV chart, net average value of Bitcoin in the GBTC fund. As you can see, since last November, this is on the yearly chart, we have been in a constant downtrend. Shares of Grayscale's Bitcoin Trust, the world's largest publicly traded crypto fund, are now trading at a record discount of 43% relative to the price of the underlying Bitcoin. Crypto analysts are speculating as to the reason, but the added pressure comes after Genesis Global Capital, an arm of digital currency group DCG, owner of Grayscale Investments, which manages GBTC, announced this week that it would halt customer withdrawals from its lending unit, stemming from the fallout from the collapse of Sam Bankman-Fried's FTX crypto empire. CoinDesk is an independent subsidiary of digital currency group known as DCG. The reason this is stated is because this article was written by CoinDesk. CoinDesk owns Grayscale, CoinDesk owns Genesis, and they own a lot more too. Grayscale is actually one of the largest holders of Bitcoin in the world, if not the largest, so keep that in mind. And Grayscale Investments reassured investors on Wednesday that Genesis was not a counterparty or service provider for any Grayscale product, and that Grayscale products would continue to operate business as usual. So the Genesis funding request of $1 billion. And in the intro, we mentioned it was Gemini. It is Genesis. That is my mistake. It's just a lot of G words. So you gotta just give me a break on that one. But the $1 billion request is not, they're saying that it's not connected to Grayscale at all whatsoever. That doesn't mean that Grayscale may not try to shore the situation and help keep them intact with $1.2 billion. But for some investors, the recent widening of the discount may have made the vehicle more attractive. Bloomberg reported that Cathie Wood's ARK Investment Management bought more than 315,000 shares, worth roughly 2.8 million of GBTC shares earlier this week. Now, if there wasn't a discount, this is a $5 million value deal for $2.8 million. And that is at current prices. And I know they're not actually buying real Bitcoins, but if they never collapse, then ARK investment is technically safe and will likely come to tremendous fruition. This week's move by Genesis has sparked speculation online that Grayscale might alter its current strategy, which consists of keeping the fund going while simultaneously suing the U.S. Securities Exchange Commission over the agency's rejection of ETF conversion. Now, we have details, some juicy details about this SEC situation not approving a spot ETF for Bitcoin, because they do have, and they have allowed for a short spot ETF for Bitcoin. So you can short Bitcoin with real Bitcoins in these funds, but you can't spot them long, which is weird and manipulative, some might say. So stay tuned for the end of the video, because we'll dig deep into that. For those of you interested in this article, feel free to jump over to the website, take a look at it, and give us your opinion below. Moving on, Grayscale cites security concerns for withholding on-chain proof of reserves. Grayscale shared a letter from Coinbase custody attesting that each of Grayscale's crypto products is fully backed, but stopped short of providing the wallet addresses for security concerns. Hopefully this is not too big of a deal, but we'll go straight to the source on this one. Grayscale did put out a thread on Twitter earlier today, new today. Due to recent events, investors are understandably inquiring deeper into their crypto investments, and in this thread, we've compiled additional information about the safety and security of the assets held by our digital assets product. Let's take a look. This article outlines everything. Go take a look at it. This has all the details that you want to see, but in summary, we'll take a look at the thread. Each of Grayscale's digital asset products is set up as a separate legal entity, an investment trust for single asset products, and limited liability company for diversified products. The laws, regulations, and documents that define Grayscale's digital asset products prohibit the digital assets underlying the products from being lent, borrowed, or otherwise encumbered. This is believable because they are the largest publicly traded crypto fund. Publicly traded, that means they have to follow strict SEC guidelines to remain on the market. All digital assets that underlie Grayscale's digital asset products are stored under the custody of Coinbase Custody Trust Company, LLC. Read more from Coinbase's CFO, Alicia Haas, and CEO of Coinbase Custody, Aaron Schnarch. Excuse me for that one. Pause the video, take a look at this. This is the official statement from Coinbase regarding Grayscale's funds. Now, I know that Coinbase likely is doing this with BlackRock as well, but it's not as big as Grayscale's quite yet. And so it gives you all the numbers, but they don't give you the wallet address to which this funding is actually in. But you can see, as you can see right here, they have about 635,000 Bitcoin into the trust. And with that said, why couldn't somebody just go take a look at the public blockchain and find the wallet that carries this balance? I'm sure you could find the wallet address like that, but maybe not. Moving on, to be perfectly clear, the BTC underlying Grayscale Bitcoin Trust are owned by GBTC and GBTC alone. Coinbase frequently performs on-chain validation due to security concerns. We do not make such on-chain wallet information and confirmation information publicly available through a cryptographic proof of reserve or other advanced cryptographic accounting procedure. Now, this also could be due to the fact that Coinbase has the coins. And if you know this, if you keep your money on a centralized exchange, it is a little bit harder to view the public address because it is not non-custodial. We know the preceding point in particular will be a disappointment to some, but panic sparked by others is not good enough reason to circumvent complex security arrangements that have kept our investors' assets safe for years. This is fair. This is fair. They don't want to, safety. I don't know. We've compiled more information for investors on our website. We hope to alleviate any potential uncertainties and reaffirm the safety and security of assets underlying Grayscale's products. Confident and stealing, or is this worrying to you? Let me know, because I am curious as to everyone's perspective on this tweet thread by Grayscale. They're being direct, so hopefully they are telling the truth. In other news, SBF's lawyer just dropped him as a client, and the fun begins. The source, Watcher Guru, or Reuters. And ironically, this happened hours after Theranos founder Elizabeth Holmes got sentenced to jail. A good warning sign to all scammers. Let's take a look at what this article states, because it looks like, he lost his lawyers. What does this mean for him? Should we be worried? FTX founder's remarks pose a challenge for his lawyers, and this is probably the reason that he lost his lawyers. In summary, the article basically states that because Bankman has sought to explain the implosion of FTX and disparaged government regulators in posts on Twitter and conversations with reporters, attorneys said such statements will likely make life more difficult for the defense lawyers seeking to manage fallout from the exchange's demise and navigate multiple federal investigations. He's basically making their job too hard. There's an old saying that a lawyer who represents himself as a fool for a client. The reverse is also true. An individual who is the subject of an investigation and tries to defend themselves in a court of public opinion has a fool for a lawyer, said Dustin Danilowitz, a white-collared defense attorney at the law firm Saul Ewing, Arnstein and Lair. In a conversation with a Vox reporter published this week, Bankman-Fried blamed FTX's collapse and a bunch of other stuff that we covered in our previous few videos. The leaked messages, what he said on Twitter, all that good stuff. Go check it out so that you're tied into this, so that you're looped into this story. But basically, Bankman-Fried's statements have already been cited in FTX US's bankruptcy proceedings. The exchange's lawyers said in court papers on Thursday that he was undermining their efforts with his incessant and disruptive tweeting. This is not good if your own lawyers, I guess they're not his lawyers, they're FTX's lawyers, and he's not associated with FTX, but he somehow thinks he is, and that he's responsible for recovering the funds. But they are completely just separating. They are isolating themselves from him. Now he is alienated, even though he wants to pretend like he's not. And there is a class action lawsuit against Bankman-Fried and others who promoted FTX. But in this case, controlling the story is the problem. He is not allowing the lawyers to control the story. Lawyers most always advise clients in litigation or facing government investigations not to speak about issues related to the case. Such statements could become evidence in court and could undermine a carefully crafted defense. Social media has made it easier for clients with large public platforms to try and mount their own defense, experts said. So this is kind of the summary. He's kind of throwing a wrench into the job of people that are supposed to be helping, and they're like, what the hell's wrong with this guy? Like, he's a total liability. He should have had actually an NDA signed, but it's his own company, or was. So I don't know what can happen, what can come of this. But in other news, and very, very, very interesting, tweeted by Crypto T, Bitcoin is being manipulated, red flag, and the SEC is in on it, a thread. Well, Wall Street institutions and centralized exchanges are selling people paper Bitcoin. You give them the money, they say you own Bitcoin, but in reality you don't. Similar to the GBTC fund that Grayscale offers. This is kind of the same thing that she's describing, but not really, but kind of. FTX alone increased the new supply of Bitcoin by 25% this year by selling people fake paper with their, non-backed, illiquid FTT token. Now think of all the other shady brokers doing the same thing. For some quick math, and for our math whizzes out there, I know Carolyn Ellison is a math whiz according to Forbes today, but quick math, 330,000 Bitcoin mined a year in this halving era until 2024. FTX has about 1.4 billion in Bitcoin on the books, meaning 80,000 Bitcoin. Assuming incurred this year, that means FTX increased the Bitcoin supply issuance by 25% this year. Others likely did the same. No wonder we're under prior cycle highs, having math interference. Something is off here, and the blockchain and trustless systems are purging it, because this is concerning. This is not a one-to-one situation. This is not something new. Gold and silver have always been manipulated by Wall Street selling paper. So in an old article, prior to COVID, JP Morgan to pay $920 million for manipulating precious metals treasury market. The SEC encourages this. They have approved 6 futures Bitcoin ETFs on the stock market. These funds do not hold Bitcoin. Six of them, and none of them hold Bitcoin. Buying a Bitcoin futures ETF is not the same as buying Bitcoin, and the difference could cost you everything. And I mean everything. Self-custody is the only way if you are in crypto. The SEC has also been rejecting spot Bitcoin ETFs. This is why Grayscale plans to sue them while also trying to put out this fire. Spot ETFs actually hold Bitcoin. That is the only thing. So they've approved something. Futures Bitcoin ETFs hold nothing. They're not on the blockchain. The spot ETFs, the things that have been on hold all the pandemic, they actually do. One company is even suing the SEC for this nonsense, and Grayscale sues them. This was June 29th, this article. They sue the SEC after rejection of bid to turn the largest Bitcoin fund into an ETF. Now, why? Why would they do this? Well, I'll tell you why. More strangely, the SEC has approved a short Bitcoin ETF. You can't invest in Bitcoin, but you can short it. You'll be able to bet against Bitcoin with an ETF before you can buy a Bitcoin ETF. The SEC approved a way to bet against Bitcoin before allowing you to buy Bitcoin itself with an ETF. Now, this is a clever way to liquidate everybody, but it's also a clever way to keep the price suppressed so that they can continue to accumulate and have more power over this trustless system. Is it possible that the SEC is corrupt? Weird question, with Gary Gensler being the chair of the SEC and, a longtime MIT buddy with Sam Bankman-Fried, who is, may I actually add, who is not in jail right now, when many other people who have done much less would have been in handcuffs a millisecond after any of this information came out. Do they have incentives from banks and Wall Street to act against Bitcoin? We all need to take our Bitcoins out of the hands of these trusted third parties. Then we'll find out who has real Bitcoin and who has fake ones, like we did with FTX. If you own Bitcoin on an exchange, you don't own Bitcoin at all. Point blank, period. Say it louder for the people in the back. If you don't own Bitcoin, if you own Bitcoin on an exchange, such as Coinbase, Binance, Crypto.com, or anything else, you don't own Bitcoin. Very, very interesting thread by CryptoT. Go like and follow her post because this was a juicy one. And finally, possibly some good news. And I mean, just not even good news. It's just a silver lining. The biggest crypto fish still standing. Binance is number 1. They're okay for now. Tether, okay for now. Will end up fully folding into the system. Kind of like Circle with USDC. They're okay. DCG and Grayscale, they are okay. Shooting for that ETF. And Coinbase, they're okay. They just need to fire people. All normal, firing people is fine because the interest rates are going up. Fed funds rate, as you know, and the plan with this is to increase unemployment, to bring down inflation. All normal, all okay. Hopefully everyone is doing well out there. This has been a rough few weeks. This has been a very rough last week and a half. Thanks for tuning in. Please like and subscribe, and I'll catch you guys tomorrow.